Entity selection to start new business. Determining the best structure for your business is based on many components. I selected few out of many based on my more than 2 decades of experience in taxation and being a licensed tax professional. The topic of discussion below is the freedom of deduction and income exclusion. Checklist to decide which entity selection fits and fulfills your needs. Number 1. Tax consequences such as self-employment taxes, tax rates, loss treatment, and deductions can be significant when determining the type of entity. Number 2. For tax purposes, the entity selection process involves choosing the liability status and entity. Number 3. Pass-through entities, also known as flow-through entities, are organizations that are not taxed at the entity level, but rather, income and expenses are passed on to the individual owners. Number 4. Do not select the entity structure based on single and double taxation. There are many aspects to consider when choosing. The pass-through entity is subject to special taxes in specific circumstances. Number 5. For small businesses, the typical earnings are $50,000 or less, depending on the area and other factors. Treating the business as a sole proprietorship and reporting it on Schedule C is the best option. Number 6. Self-employment tax is applicable to all earnings related to services as a proprietor. Husband and wife are perceived as one partner, instead of creating a partnership. Number 7. The cost of filing payroll tax returns and a separate tax return for the business can be avoided by sole proprietors. Number 8. When you select an entity for your business, you scale active and passive activities, limitations and restrictions, fringe benefit restrictions, salary attribution, and there are many factors which are mathematics before the selection because later the termination is not simple. Number 9. Pass-through entities often require taxes to be paid in the year they are incurred, whether they are distributed to shareholders or not. Number 10. It's important to have an exit plan when it comes to retiring and dying. Discuss about the beneficiaries. Number 11. During the planning phase, it is important to discuss business divestment options. It should be noted that the IRS has emphasized service businesses, especially accounting and real estate brokers, over capital-intensive ones like retail or manufacturing. The reason for this is that profits are more influenced by the efforts of employee owners than by the capital invested. During the planning phase, it is important to consider the following factors when choosing an entity's structure. Qualified business income deduction. Capital loss carryovers. Section 179 limitations. 100% expensing of fixed asset purchases. Net operating loss carryforwards, passive activity limitations. Net investment income tax. At-risk limitations. Salaries for the owners. Other income for the owners. Deductions for the owners. Contact us. Telephone number 51682231006316235100. Email address support@infotaxsquare.com. Website infotaxsquare.com. Office address 2310 Hempstead Turnpike, Suite 3, East Meadow, New York 11554. Thank you and God bless you.